You're at the end of a long year. One more cycle of headlines, one more cycle of layoffs, one more cycle of predictions about a job market that never behaved the way experts said it would. In this episode, you will see a world that is splitting. You will see a job market that is compressing. And you will see AI leave the browser and enter the physical world for the first time at scale. Take a seat, take a breath. Let's begin. 3 years of turbulence left deep marks. Layoffs across tech stayed about 200,000 people this year, lower than the 2023 peak, but still far above anything before the pandemic. Quit rates dropped, job hopping slowed, openings are narrow, skills are specific. The market is not resetting, it's compressing. To stay relevant in 2026, you need depth, you need a domain, and you need clear proof of work. Generic talent is under pressure everywhere. Let's break it down country by country. If you live in the United States, you already feel it. The job market is not collapsing, it is thinning in the middle. Since 2023, more than 280,000 people in US based tech companies lost their jobs. Cuts removed mid level roles in product, engineering, and operations. Meanwhile, senior compensation hit historic heights. Staff engineers, principal architects, group product leaders, anyone close to strategy and revenue, that is. Execution work did not disappear, it moved. Some of it moved to Latin America. Some of it moved to India, Eastern Europe, and the Philippines. If you sit in the middle, you now compete with the entire world. If you sit near strategy and outcomes, your value rises. Canada tells a different story. People who already had roles stayed employed. The pressure leaves on the hiring side. Senior openings improved slightly, entry level roles remain sharply down. Work that stays in Canada ties directly to architecture, decision making, and customer context. Execution work follows the same path as the US. It moves nearshore or offshore. If you want to break in, the market is slow. If you want to stay in, you must deepen your skills. Europe enters 2026 with an industrial slowdown and a digital sovereignty crisis. Germany lost almost 250,000 industrial jobs since 2019. Automotive exports weakened, energy costs stayed high, competition from Chinese EV and battery makers increased. Then Europe saw a symbolic event. Northvolt, once valued at $12 billion, filed for bankruptcy with more than $5 billion in debt. Confidence in Europe's green industrial strategy shook. At the same time, Europe relies heavily on foreign hyperscalers for cloud. So the continent is turning inward. Eurostack is the priority. European chips, European clouds, European AI models, a compliance layer built under European law. This creates demand for AI governance specialists, cloud architects, security, and data professionals. 2026 will be a defensive year for Europe, a year of rebuilding. Saudi Arabia and UAE are building their way onto digital independence. Local data, local clouds, local AI infrastructure. Both countries committed tens and billions to data centers and GPU clusters. This is about negotiation power. If you want access to their users, you operate locally and follow their laws. Hiring reflects that shifts. Generic mid level roles decline, deep specialists rise, especially in energy, logistics, finance, and cybersecurity. If these are your fails, the Gulf is a growth engine in 2026. Asia is not a one story, it's three engines moving in different directions. Let's talk about China. China is building a parallel AI stack, local chips, local clouds, local rules, local data controls. Export restrictions accelerated domestic research. China wants independence from NVIDIA class hardware. This creates a self contained ecosystem with its own standards. India is the data engine of the world. It generates close to 20% of the global data but holds small share of global capacity. That gap is closing fast. Data center load grew from 350 megawatts in 2019 to about 1,000 megawatts in 2024. It may nearly double again by 2026. So real companies are driving this. Adani Connects, Airtel Nextra, STD GDC, NTT, Control S, Sifi, Yota. Microsoft announced a $17.5 billion AI investment package beginning in 2026. India is becoming one of the fastest growing AI infrastructure markets in the world. Southeast Asia is a quiet growth belt. Indonesia, Vietnam, and Malaysia attract new AI data centers. Singapore remains the legal and cloud nerve center. Japan and South Korea lead in robotics and industrial automation. If physical AI accelerates, these countries will shape it. The global south splits into two groups: data rich and infrastructure poor. India, Brazil, Indonesia, they generate massive data but depend on American clouds. They export raw data, it is refined elsewhere. They buy back the intelligence. Capital rich and infrastructure aggressive Saudi Arabia and UAE, they're building their own stacks. They negotiate from strengths. They can demand local operations. This divide is the new AI map. For a decade, companies relied on three clouds: AWS, Azure, and Google Cloud. In 2025, a new category gained traction: Neo Clouds. CoreWeave, Lambda, Nebius, these companies focus on GPU compute for AI workloads. They cut costs and simplify operations. Price gaps range from 30 to 60% compared to hyperscalers. Enterprises are also bringing in heavy AI workloads back to on prem. This is cloud repatriation. It creates demand for AI infrastructure engineers, hybrid cloud architects, security teams, and FinOps specialists. Cost is now the strategy. 2026 is the year AI regulation becomes real. The EU AI Act begins enforcement. High risk systems must be documented, audited, explained, and monitored. Boards want model inventories, governance plans, risk reports, and staff training. This creates roles in AI governance, model auditing, data stewardships, and AI product operations. If you want an AI carrier without being a researcher, start here. 2023 was chat, 2025 was agents, 2026 is physical AI. AI will live in factory cameras, robots, drones, medical devices, home appliances, vehicles, power systems. NVIDIA's Jetson platforms already run robots in warehouses and farms. Factories are installing AI inspection systems. Hospitals are piloting AI diagnostic tools. Utilities are adding predictive AI to their grids. AI will run on the edge, close to the work, not far away in the cloud. It will detect, it will decide, it will act. And if you work in logistics, energy, healthcare equipment, automotive, or industrial operation, this is your moment. There is no return to 2021. Not for jobs, not for cloud, not for geopolitics, not for AI. The world is reorganizing around infrastructure, energy, data specialized skills. The middle is thinning, depth is rising. If you build deep skills, if you learn how AI changes your industry, if you can work across physical and digital systems, you will have leverage in the years ahead. You're living through a turning point, and you get to participate in what comes next. Let's see what 2026 brings.